Can you buy an investment property with no money in Australia? The answer is yes. Believe it or not, you can actually invest in property with little to no money if you are sensible and you have done all your research with all the options you have right now. Having little money should not deter you from investing in property. However, you will need to be smart about it and consider a few key ideas throughout the process. That's because saving a deposit for an investment property in today's market is proving to be the biggest barrier for most Aussies looking to get into the property market with a real estate investment. It's no wonder there is an increasing number of people looking for an investment property loan with no or little deposit in order to enter the property market. But just because you are not flush with money doesn't mean you can't invest in property. Before we get to the different options available, we should underline that some options can only be viable for specific cases and will not apply to everyone. However, some of these options, which may be close to your current circumstances, may provide a guide for your investment strategy. Let's take a closer look at how you can buy an investment property with no or little down payment. So how can I buy an investment property without a deposit? There are several ways to buy an investment property without a large upfront deposit in Australia. Here are different ways to do it. Use existing equity in your property. If you have an existing equity in your current home or in another investment property, you can borrow against that and use those funds to finance a new deposit, allowing you to buy a new property. If you have enough equity in your current property, then it won't be necessary for you to save up for a down payment. Another method to use is cash out refinance. If you have about 20% equity in the existing property, you can take out a new mortgage for more than what you owe. Then you can use the extra money to either buy another property outright or as a down payment on a property. As a bonus, your equity will grow faster with more properties, which equates to more capital growth. The more equity you can access, the easier it is to expand your property portfolio. But what if you don't have an existing property that has equity you can use? How can you invest without coughing up a big deposit? For people in this situation, a viable option is to get a guarantor loan from lender. Recently, banks have started offering 100% guarantor loan if a close acquaintance or a family member is willing to guarantee a percentage of the debt. So how does it work? First off, you will need a guarantor, usually a family member who has their own property. Their real estate will serve as a collateral for your lender. Under this option, you, the borrower, will make your repayment like any other home loan, but the guarantor is held responsible if you fail to make any of your repayment. Nowadays, most banks and lending institutions will allow the guarantor to cover a certain percentage of the loan. Ideally, the 80% LVR loan to valuation ratio sits with you, while the remaining 20% is secured in cash or through the guarantor loan. This means that in some cases approved by the bank, you can use a guarantor to cover the percentage that you don't have. Depending on the terms and conditions, you can also remove the guarantor once you have secured enough funds or equity to cover the debt. This way, your guarantor will only be involved in the mortgage proceeding for a shorter period of time. Other method is self-finance. Moving on to the more non-traditional ways to buy an investment property without a down payment, we look into seller finance. Seller financing refers to an agreement in which seller handles the mortgage process instead of financial institution. In more simple terms, this involves you to taking a loan from the owner of the property rather than a bank. By taking it directly with the owner, you don't need to save a deposit. You just need to reach a deal with the owner that will pay the full price of the property. This removes the need to have the funds upfront or for a deposit. Let's look at an example where this option could work. Let's say you are currently renting a single family house. After years of renting, you could inquire to your landlord if they would be interested in selling you the property. If you have been paying rent on time and you have kept up a good business relationship with the owner, you could potentially reach a private agreement with the landlord after reaching a deal. Partnership agreement. Lastly, consider forming a partnership with someone who has the deposit for the property and is willing to foot the initial bill in exchange for you doing the legwork. You can think of it as getting a financer. While this option may only provide you with a smaller ownership percentage of the property, it's a start and good way to become an owner without saving up for a deposit. Preferably, you can seek out a partnership with someone who is money rich but time poor that wants to invest in property. Don't discredit the amount of time and effort that goes into property purchases. There is a lot of research that goes into finding the right investment. If you have good negotiating skills, you can also convince them to pay the deposit in return for your work organizing the purchase. Of course, you will need to consider the legal requirement involved in this. It's advised to seek the help of professional legal advisor, so it is outlined how profit and losses will be split. Alright guys, so these were few of the options I have given you to purchase a property with a little money or no money at all. I hope you found these information really helpful. I will see you in my next video. Until then, goodbye.